Welcome everyone to another exciting episode of my weekly price action based technical analysis, and I'm indeed thrilled to have you here. During the live session today, we are going to be delving into a detailed analysis of the financial instruments that we have been in our watch list for this week, focusing on a comprehensive price action perspective. And together, we're going to be exploring the recent market movements and chart patterns to uncover valuable insights that could greatly influence our trading decisions ahead of the new week. So get ready for an insightful session. I welcome you all to yet another promising session here. And for those who are joining us for the first time, this is what we simply do on a daily basis, and this is from this is going to be more of a follow-up detail to the instrument I shared during the course of the weekend. So for the new week, we are having the GBPUSD, the USDJPY, the XAUUSD, and of course the USOIL SPOT. So I already did a detailed top-down analysis on this instrument during the course of the weekend. So we are going to be doing a follow-up detail on how we are going to be positioning ourselves ahead of the London and the New York session today. So we normally focus on the 1 hour time frame, but if you do want to understand or have a background knowledge of how we got to this point we are on the 1 hour time frame, or how we identify the key structures we are using to guide our trading activity, then definitely you want to watch those videos. So I have the link to those videos right in the description box of this current video you are watching, so you can check it out after the end of the live session, so that you can also use it as a yardstick to guide your own independent decision on whatever instrument you are going to be looking at. And in fact, I've made things a little bit easy, so these videos are duly timestamped, so you can easily navigate through whatever area you want to be focusing on. So with that being said, today let's dive right into the business for today. And you know how we do it. The first thing we want to be doing is to check the economic calendar to see what is really going on and what majority in the market will be looking out for today. And you know how important this economic calendar is for us. It helps us for better timing, so that we can time ourselves ahead of this event, during the event, and after the event. It also helps us to position ourselves in such a way that we can catch any potential opportunity prior to the event, during the event, or even after the event. So that is why we always check the economic calendar. And one interesting thing during the early hours of today is the fact that the US dollar has been holding its ground against its major rival. And you can see that the momentum is as a result of what has been going on during the last trading day of last week. And I think this momentum is gradually picking up ahead of the major event we are looking forward to today. So one thing we are going to be doing here is to focus on high impact events that will be affecting this instrument we are looking at. So we normally focus on high impact affecting the pound sterling, the US dollar, the Japanese yen. So for this week, let's run through what okay, I think I did. Okay, let's see. For this week, so we are going to be focusing on high impact event majorly, which will be affecting any of the currency pairs that we are monitoring. And for today, Monday, June 5, we have the ISM Services PMI, which is coming in from the US docket. And this is an index that is normally released by the Institute of Supply Management. So it shows us the business condition in the US non-manufacturing sector, and it is worth noting that the non-manufacturing sector does not influence either positively or negatively the GDP. So a result above 50 is always considered as something positive for the dollar, while anything below 50 is considered negative. And from the previous data we have here, we have a 51.9, and we have a general projection. The economists are projecting that we are likely going to be seeing a 51.5, which is a little bit on the lower side compared to the previous data. So we are going to be waiting for what the actual data is going to be like. Will it be as expected, or is it going to be below expectation, or probably beyond expectation? So these are the things we are going to be looking at, and we are going to be looking at the chart from a technical standpoint to understand how majority in this market are anticipating this event. And beside the ISM services PMI, there are no other high impact event that we want to be looking forward to today. So the high impact event is coming in about 5 to 6 hours from now, so definitely we want to get prepared for that opportunity. So let's dive right into the chart, and as usual, you know what we look out for. The first commodity we want to take this morning is the USOIL SPOT. So I would like to bring up the USOIL SPOT chart right now, and here we go. So on the USOIL SPOT, this was what I was able to identify this morning on this commodity. And if you had watched my video, you would understand how we got to the point of having the $72 level serving as our key level for the week. And you know how we do it with our key level. Whenever we have key levels like that, it helps us to position ourselves in such a way that we can feel comfortable in whatever position we are. So what this simply means is that if price action remains above our key level at the $72 area, we want to be looking out for structures, patterns that will support buying the USOIL SPOT. And if price action breaks down the key level, then definitely want to be looking out for opportunities to sell the USOIL SPOT. And if we go right into the chart right now, what you will see here is quite interesting. As you can see, since the beginning of the week, as the week started here, we had a bullish gap. Remember, this is where the week closed last week, around the $72 area, which is our key level. And we saw the market open at above the $73.40 level. This was where market opened. So we had about, how many pips gap was that? Let's look at that quickly. So we had about 100 pips gap, which is excuse me, please, I'm having a flu, so please don't mind my voice. I might be doing some sneezing and coughing intermittently. Please bear with me. So I have we had 100 pips to 120 pips bullish gap here, which is a sign that during the course of the weekend there was a whole voluminous trading activity which supported a bullish move. And if you recall that we expect the OPEC Plus to have a meeting on Saturday and Sunday, which I'm yet to get an highlight on that one. I'm yet to get the outcome of what the meeting is like, but there is a general consensus that the OPEC Plus members are likely going to be cutting oil production again so that they can artificially drive price to the upside. And with the situation we have here this morning, we will see how price action had been caught within a range between the $73.40 level, this is where it is, and the $72.50 area, giving us a simple channel we want to be using to guide our trading activity for today. And you know how we do it whenever we have this kind of simple setup. We want to wait for price action to give us a signal in the form of either a breakout of the resistance line, something like this, to give us an opportunity to buy, or a breakdown of the support line to give us an opportunity to sell. And with the look of things right now, we already have price action triggered our buy stop order. I shared this morning on my public platform. So if you have been with me on my TradingView and Telegram platform, you would have gotten this update that we are going to be buying at the breakout of the $73.40 level. Let me show you my commentary on my TradingView platform here, so that we can all be on the same page. So it's trying to load up. Let's see. I wonder why it's taking a long time. Hold on a second. Let's see. Let's try it one more time and see. Okay, we are good now. So this was my first commentary this morning on the USOIL spot. I said here that the new week opened with a bullish gap as price action remained above our key level we identified at the $72 level. That's a typographical error there, it's 72. And with a simple flat channel identified on the 1 hour time frame, we are going to be waiting patiently for signals of a breakout or breakdown of the range for trading opportunities. So with this situation here, we already have a buy stop order above the $73.40 level, and coupled with the fact that we have a bullish gap at the beginning of the week, which is a sign that majority of the key players in the market are tending towards a bullish momentum. Let's see how far this bullish momentum is going to go. So our stop losses should be somewhere right below the trend line, something with about 70 pips thereabouts. You might say it's a little bit high. Well, we hope that we are still going to be having more opportunities to maximize the potential of this bullish momentum during the course of the week. So it might start at a slower pace this morning. Let's be patient. Don't let us be compulsive. Let's see how this is going to play out going forward. Then in addition to this flat channel we have here is this trend line I was able to identify. And after connecting the series of higher lows of price action since last week Thursday, this is what I was able to come up with. So we have a trend line, which of course is going to be helping us to guide our trading activity going forward. So what this simply means is that as long as price action remains above this trend line, we will feel comfortable in our buy position, and as long as it remains there, we always look out for more opportunities to maximize the bullish momentum. So on the USOIL spot for today, we remain bullish unless price action states otherwise, and the only way we can start thinking of selling the USOIL spot today is to see price action break down this bullish trend line. Then if we do have a breakdown of that bullish trend line, then definitely we want to be considering selling the USOIL spot. But mind you, we are not going to be getting too excited. We are not having a sell stop order below the trend line. We will need a confirmation before we want to join the bearish move. And if we are looking for confirmations, you know how we do it here. We want to see price action retest structure. So as soon as we have the breakdown of that structure, we scale down into our lower time frame where we want to look out for price action retesting the trend line, give us a couple of selling pressure around that area, or probably a reversal pattern. Then we want to start considering selling. Then at that point, if we could sell, then we have a sell stop order below the $72.50 level, continue to rather move to the downside, and depending on how price action reacts to our key level will determine if we are going to be selling, that is if it breaks down the key level, or if it's fine buy pressure above the key level, then we want to be looking out for buying opportunities to join the momentum to the upside. But trust me, I will be with you on both my TradingView and Telegram platform to give you updates on what we think is going to be happening when price action does any of this movement. So keep calm. I'm going to be with you on my TradingView and Telegram platform to always give you updates as at when due. So this is what we are looking at on the USOIL spot this morning. It's a very simple setup. There's no complications here. We have a flat channel, we have a trend line, and as long as price action remains above the trend line, we shall feel comfortable in our buy position. So this trend line will definitely guide us into placing our stop losses accordingly. So if you have any questions regarding what I just explained, or you need me to clarify any aspect you want to, please feel free to let me know right in the comment section. So with that being said, here on the USOIL spot, I will be moving on to the next pair quickly. And the next instrument we are going to be looking at this morning is going to be the GBPUSD, that is the pound sterling. And we already have a simple setup here on the pound sterling this morning. And if you had been with me on my TradingView and Telegram platform, you would have seen this update. So I personally missed out on this opportunity as this happened very early this morning, and before I could get to my chart, we already saw the breakdown of both the key level and the 1.24250. So I have a simple flat channel here on the GBPUSD chart this morning, where we had a price action ranging between the 1.24590 level and the 1.24250 1.250 area, just right around the key level we identified on the GBPUSD technical analysis during the course of the weekend. So please watch that video so that you can understand how we got to the point of having a key level at the 1.2440 area. So the key level is serving as our yardstick for trading activity for this week. So as long as price action remains below the key level, we want to be looking out for opportunities that will support a bearish momentum, and if price action breaks above the key level, we look out for buying opportunity. But at this point in time, it is looking bearish. Price is breaking down the trend line, the key level, breaking down the support line for the week at the 1.24250, and obviously we have no other choice than to look out for more opportunities to sell. Now, for those who are taking advantage of this opportunity here, well done to you guys for being on standby to catch that one. You might want to move your stop loss right now to secure the current sell position. And you know, we've been selling the GBPUSD since last week, and some of us have open positions. We had open positions over the course of the weekend. So if you still have that running, move your stop losses right now, secure the current sell position. Let's see how price action will play out. And for those who had missed out on this opportunity just like me, well, what we are going to be doing here is to remain patient, waiting for new structures to mature before we want to be joining any move here. And one of the scenarios I want to be looking at this morning to be part of a trend continuation, one of them is since price action just broke down the support line here had a 1.24250 in the last couple of hours, and you know, from a technical standpoint, whenever price action breaks down a key structure like this, we expect that price action will come back at one point in time to either retest that area, give us some selling pressure to incite the trend continuation to the downside. So this is one thing I'm looking out for. So we want to remain patient. This might take about 2-3 hours before it matures. So let's see how it's going to come back. Will it come back into the structure or into the key level here at the 1.2440 area for us to be part of another wave of bearish momentum to the downside? So that is one scenario we are going to be looking at. Then the other thing that could happen here is for price action to transition into a trend continuation pattern. So we could have a bearish rectangle, or probably a pennant or a flag pattern, an inverse flag pattern, to give us something. So if I give a visual representation of what I'm talking about, so let's say this impulsive move right here, and we start seeing a choppy situation around this area, something like this, forming a pennant or a flag pattern, whatever it is, then a breakdown retest of structure on our lower time frame will give us an opportunity to join the bearish momentum to the downside. So at this point, we are still looking very, very bearish at this point. Let's see how price action would react to the structure. Then before I close on the GBPUSD, I want us to have an holistic view of what is really going on in this market from a long-term perspective. Now, when we scale up into the 4 hours time frame, you would have seen this if you watched my video on the GBPUSD. Remember, we acknowledge here that price action has been bearish on this chart, and to further emphasize that we have a bearish trend line after we connected the series of lower highs. And during the course of last week's trading session, we saw the breakout of the trend line, retest of the trend line to the upside to give us a bullish signal. So since price action broke out of that trend line, there is a chance that price action could come back and retest the trend line to incite another wave. So this is what I'm trying to say here. So since we had a breakout of the trend line, there is a chance that price could come back and retest the structure where the appearance of buy pressure will incite another wave of bullish momentum. So let's see how far this bearish momentum will go, the one we are enjoying so far since last week. If it comes into the structure, remember we have a bullish trend line here. We want to see how it will react to this trend line, and that will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. But trust me, I'm going to be with you on my TradingView and Telegram platform to give you updates at the right time. So you want to join my TradingView and Telegram platform to get this updates. So that is that on the GBPUSD for today. And I hope I've made myself clear. If you have any questions you want me to deliberate on, please let me know right in the comment section. So I'm going to be moving on to the next pair. So the next instrument we are going to be taking this morning is going to be the USDJPY. And first of all, let me run through how what we saw on the 4 hours time frame on the USDJPY. So it was a simple setup we have here on the 4 hours time frame. It's quite obvious that since the beginning of the month of May, price action has been bullish. Continuous higher highs and higher lows gave us this beautiful ascending channel you can see on your screen right now. And something interesting happened last week. I think on the last trading day of last week, okay, the second half of last week, we saw how price action came back into the support line of that ascending channel with some buy pressure around that area to incite another wave of bullish momentum. And what I said here during my video the course of the weekend, that we are going to wait and see how price action will be reacting to that key level. We had a key level at the 140.00 level where we said depending on how price action react to that structure will determine if we are going to be buying or selling the USDJPY for this week. And you know how we use our key levels. Our key levels helps us to position a buy or sell at any point in time. So when price action trades above that key level, we want to look out for patterns that will support a bullish momentum. And if price action drops below our key level, we definitely want to be looking out for structures that will support a bearish move to the downside. So right around our key level, we needed to focus there and see how participants in the market will be reacting to that level at the beginning of the week. Then when we scale down into the 1 hour time frame, we begin to see things very, very clearly. And this was what I was able to identify on the 1 hour time frame. So if you had been with me on my TradingView and Telegram platform, you would have gotten an update in that regard. So we saw the situation here where price action has been ranging actually since the beginning of the week. And one thing about the range is the fact that the key level which we identified prior to the beginning of this week was broken to the upside, and now it became a platform for buying opportunity. As you can see, we begin to see buy pressure around that area. So every attempt by the sellers to break down that area was met with strong resistance from the buyers, and this led into the situation we saw a couple of hours ago when price action broke out of the resistance line of that flat channel to signal a bullish momentum. Though we actually missed that opportunity, but as price moved to the upside, we expect at one point in time price will come back and do a retest of that resistant line. So we already seen something like that happening right now, and I already had a sell buy limit order around that area with the hopes that when price comes back it will trigger my buy position so that I can continue the bullish move to the upside. So at this point I already have my buy limit triggered, and let's continue to see how price action will be reacting to this level going forward. So it's still looking very bullish at this point. So as long as price action remains above the resistance line at the 140.250, we continue to look out for more opportunities to buy. Then another structure is identified here at the 140.450 level. This is another resistant line which you can see as soon as price got into that area, we saw selling pressure coming in from that level. So I want to identify that area for the sake of clarity. Let's label it. So we have it at 140.450 level, right? And I'll give it a blue color so that okay. So now that we have that structure mapped out, that is another opportunity for us to maximize the bullish move if price action will continue to the upside. So we continue to look out for more opportunities when the breakout of the 140.450 happens. Now, if the situation transitions again in such a way that we see selling pressure resume, and then definitely we want to be on standby. You know how we do it here. We don't want to put all our eggs in one basket. We want to be as dynamic as possible. The financial market environment is a very, very fluid environment, and for us to be consistently profitable, we want to be also dynamic as possible so that we can capture any move. So in as much as we're looking out for buying opportunity here, we also want to consider the potentials that the sellers have to as well. Now, if we look at this current structure here, What do we want to see on this chart that will make us change our bias from bullish to bearish? Well, if we look at the impulsive move that started last week here, you will see that a retracement phase at this point seems long overdue, as those who bought the USDJPY at a cheap price, let's say around the 138.800 area, will at one point want to be doing some profit taking activity, which will definitely reflect on the chart as a retracement at one point to the downside to anticipate another wave of bullish momentum. And if we are going to be part of that retracement phase, if the retracement phase will really happen, then we want to see a break back below the 140.00 area, which happens to be the support line for the week, somewhere around here. Breakdown of that structure. Remember, we are not joining right away because this is a strong bullish momentum. We need confirmations before we want to join, so we are not having a sell stop order below the support line. So we want to see a breakdown happen. First of all, we scale down into our lower time frame and look out for retest of structure where selling pressure resumes. Then at this point, we want to get a sell opportunity to rather move all the way to the downside. And if it goes to as far as the support line of that ascending channel we identified on the 4 hours time frame, then at this point we want to move all stop losses to secure our sell position, while we look out for how price action will react to that level, and this will determine if we are going to be adding more sell position or get ready for another wave of bullish momentum. So let's keep this in mind while we continue to monitor price action here. So we still remain bullish here unless we have a breakdown of the 140 retest of that level that will change the bias from bullish to bearish. So I will be with you in the comment section of both my trading view and Telegram platform to give you updates as at when due. So that is that on the USDJPY. If you have any questions whatsoever, feel free to let me know in the comment section. So I'm going to be moving on to the last instrument for today, which is one of the most profitable trades for us last week, and that is the XAUUSD. So we had the privilege of enjoying a strong bearish momentum last week, Friday, after the NFP data came in beyond expectation and giving us this strong bearish momentum to the downside. So we rode the move all the way. Let me see where that was, around the 1,980, of course, after we identified that choppy situation and we had price move over 200 pips on one position. Remember, we had multiple entries on the XAUUSD to help us maximize the bearish potential in that market. So it was quite a very interesting and profitable week for us on the XAUUSD last week. And right now, going into the new week, this is what I was able to spot here on the 1 hour time frame. So please, for those who still don't understand how we got to this point, you might want to watch my video on the XAUUSD. The link is in the description box of this current video, and they are duly timestamped so that you can easily navigate to whatever aspects you want to be looking at. So you will get a better idea into how we got the idea of this key level at the 1,955 and the 1,940. So at the beginning of the week, this is what we saw here this morning. We saw our price action has been very bearish, and one thing I did immediately was to acknowledge this bearish momentum by connecting the series of lower highs in this market. And when I did that correctly, we have this trend line here, which is definitely going to be one of the yardstick we are going to be using to guide our trading activity for today. So what this simply means is that as long as price action remains below the bearish trend line, we'll feel comfortable in our sell position while we look out for more opportunities to join this bearish move. Now, in addition to that bearish trend line is this structure where price action was initially ranging between the 1,950 and the 1,944 level, and we saw the breakdown of the structure which triggered a sell position here. And for those, that reminds me, for those who had a sell position over the weekend, please, at this point, it is very necessary that you move all stop losses to secure your position. Anywhere above the 1,944 seems most appropriate. Anywhere between this level, this zone here, seems most appropriate to secure all sell positions at this point. So we look out for more opportunities. We already have a breakdown of this new support line for this week here. And you all know from a technical standpoint, whenever we have a breakdown of structure, we expect that price action will come back, retest this level, and then incite another wave to the downside. So let's keep that in mind. We're still looking bearish here as long as price action remains below the structure. I think I have a couple of questions here. Dominion Site Office says, could you please clarify what do you mean by secure the position? BS, yesterday I closed in profit. Once you share the chart over Telegram. Okay, so it's simple. What I mean by secure all positions is that normally we have a culture here that whenever price action moves significantly well in our favor, we don't want to lose out on that opportunity, that profitable position, of course. So the next thing we want to be doing is to secure the position. And what I mean by securing your position is moving all your stop losses on that position into a level where if price action drops back into and takes you out of that position, you will not be taken out in a loss. So you will have been taken out with a small profit, or at a worst case scenario, break even. So whenever we have a significant move in our favor, and when I say secure all buy positions, secure all sell positions, what I simply means is that move all stop losses to a level that will secure the position, and if price drops against us, we will not be taken out in a loss. So that's what I simply mean by secure all position. I hope I made that clear. If you still need clarifications, let me know. Sonny Paul is asking that when you say secure position, do you mean to move stop loss? Okay, I just explained that. That is simply what I mean. Move your stop losses. Depending on how price action has moved, it could be to break even. And if it has broken more structures, you want to move your stop losses accordingly as price action moves in our favor. Solutionists, I hope I pronounced your name correctly. Maybe move your stop loss to break even or in profit. I think this the whole question still buttresses around what I just explained earlier. So when I say move your stop loss, when I say secure your position, you want to move your stop loss to lock in the profit you have made so far. So I hope I made myself clear there, everyone. All right. So that is what we are looking at on the XAUUSD. Things are still looking very bearish here. So as long as price action remains below the trend line, we continue to feel comfortable in our sell positions while we look out for more opportunities at the breakdown of the 1,940. Now, in as much as we're looking out for selling opportunities here, you know how we do it. We always want to keep our options open. We also want to consider the potentials that the buyers have in this market, and if we are going to be getting ready to buy at this point, we would rather see that bearish trend line broken to the upside to negate this bullish momentum. And the only way we are going to be buying is to see price action break out of the trend line. Remember, we are not getting too excited. We are not having a buy stop order. We want to wait for confirmation. This is a very strong bearish momentum, and for us to join any reversal pattern here, we really do need a confirmation, which would reflect on our chart when we scale down into our lower time frame, like the 15 minutes, 10 minutes, or 5 minutes time frame. Look out for retest of structure, buy pressure around this area. Then at this point, we want to be considered buying the XAUUSD. Then we look out for more opportunities at the breakout of the 1,950, breakout of the 1,955 to join, to add more positions to our existing trade. So that is my view here on the XAUUSD today. It's a simple setup. Mark this out on your chart, and trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you updates as at when due. So on this note, I want to call it a day here. It has been a wonderful moment, and I hope to see you right in the comment section as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.